Hello viewers, our mission is simple. It's to help you better understand matters of economics and finance.
Welcome and thanks for joining us here on Centrally Speaking. I'm Anna.
And I'm Sheena. Today we have part 2 of our conversation with Robert Stennett. Last time Mr. Stennett told us about monetary policy and the Consumer Price Index. This week he'll talk to us about inflation targeting.
We'll get into our conversation with Robert right after we hear what the people have to say about inflation.
Do you think you get value for your money when you do business with banks?
Yeah, man, I think they're giving a good amount of decent returns, but I believe they can improve more on some areas in terms of customer service and interest rates and stuff like those.
The bank rates could obviously be cheaper or less expensive, but I think overall, service I get from the banks are pretty good. The online platforms are also good. There are some things that I could definitely work on, but overall, I think it's pretty good.
Nah, as a small man, you don't go juggling on the road. You don't get by for your money. Somebody did it, they get the benefit of your money. Somebody did it, it's when time you pay, go in and say, lend me your money. Somebody did it, then get all the run around. When time I have 2 million in the bank, right? I want a loan for buy this car for 1.5, you know. They might tell me, say, me have to go get this, me have to go get that, me have to go get all sorts of tara. You see, I did it, and my money with me borrow now. More than me have in my bank, you know. You know me though. Just you up my money and buy what I buy.
No, because it even what take place right now in the economy, right? I figure more or less that the bank can go a little bit low on the interest rate right about now, right? Because even if you even go to the machine, right, and you draw the money and you go versus inside of the bank, you pay more when you go inside the bank and them not really doing anything much. You understand me? So I figure more or less that the interest rate can go down for that period here.
It could have been better. You could have get like lower rate and them stuff there, you know?
No, you don't get no value for your money. Them trick you. Because the interest of them give you a little bit, it don't make sense. But you have your money under your mattress and work on it and get interest on it. You don't get none in the bank. A trick and trick you.
Could say yes, could say no. Why I could say yes, based on interest. So I save money, but me not really drive me rate until a year's time, then they see how many interest I got. Why I say no, say for instance I go to the bank and I say no more 100,000, they're going to ask me why I want it, what's the intended purpose for the 100,000. Well, it's my money. So then again, if I have it at home and in the mattress, I want it, well, I just go exactly feed and get it. So that's my take on it.
Welcome back to Centrally Speaking. Mr. Robert Stennett from Bank of Jamaica continues the conversation we started last week. Mr. Stennett, welcome back.
Thanks for having me back.
Hi Robert, welcome back to Centrally Speaking. This week we continue our conversation on monetary policy. But I want to ask you a straight up question. You know, as I'm saying, the street's big and serious. Why is BOJ focused on inflation rates and not the exchange rate?
Well, I would say that there are two reasons. One, and I think the most important one, is that this is what the government has told us to do.
Okay.
The principal objective of the central bank is being actually set out in law, where the bank is going to be responsible for price stability, defined as inflation in the range of 4 to 6%.
Right.
One of the reasons is that if the government were to set the exchange rate, it would have to put in place certain things to make this happen. One of them, which I think people don't consider well, is the fact that it would have to prevent, that is to say, the government would have to prevent people from moving money out of the country.
Right.
And I think that this would be bad for the economy. Okay. Why? Because if people are not allowed to move money out, then people with money are not going to be willing to move their money in.
Right.
And therefore, you will not have the economy being as buoyant and as dynamic as it should be. The second reason is a flexible exchange market allows the economy to respond to shocks. For example, if for any reason there was a fall in US dollar supply into the system because of, say, a global health pandemic, the exchange rate would adjust instead of the government telling people that they have to adjust. And so the economy actually goes through a process where people make decisions about how they are going to react to this fall in supply, rather than in the case of some other countries, the government coming out and saying, guys, we have to take a cut in wages. So a freely determined exchange rate allows people to make decisions about their welfare without the government having to step in and so doing when there's a shock.
So when said another way, the advantage of pursuing the inflation rate instead of the exchange rate is that when you pursue the exchange rate, it might come with restrictions on access to foreign currency.
Yes.
Okay, but when you pursue the inflation rate, it allows the foreign exchange market to move freely.
Yes.
And adjust to market conditions.
Yes.
Okay.
So Robert, for years we've been hearing, don't focus on the exchange rate, don't focus on the exchange rate. But that's basically what we do. So you're saying if we focus on monetary policy, it will help to stabilize the Jamaican dollar against its US counterpart?
Yeah, that's a very good observation. And that is in fact true.
Okay.
If Bank of Jamaica is successful in keeping inflation low, stable, and predictable, and importantly, if the exchange rate is at what we call a fair value, then almost automatically the exchange rate on average will be stable, meaning it will change at a rate that is acceptable to Jamaicans.
Okay.
As a simple example, if inflation in Jamaica is higher than inflation among our main trading partners, and let's just take the example of the US, then what is going to happen? Well, it means that the price of the goods and the services that Jamaicans sell to our United States counterparts are going to be going up at a rate that is faster than what Americans are experiencing from the competitors that Jamaicans are facing.
Okay.
And so Americans are going to start switching away from buying Jamaican goods and buying those of our competitors. Jamaican exports, therefore, are going to start falling. And the inflow of foreign exchange from these exports are going to go down. There's also another case where the imports that Jamaicans buy from the US are going to be going up at a rate that is slower than the rate at which Jamaicans can compete, or the Jamaican producers can compete.
Okay.
In other words, a Jamaican producer will not be able to sell to Jamaicans because Jamaicans will find it easier to buy a cheaper product from the United States.
Oh, okay. Because the prices are lower.
Because the Jamaican prices are going up faster than the foreign counterparts.
Right.
And so you'll find that Jamaicans are buying more imports from abroad, and the demand for foreign exchange is therefore going to be going up. So the simple example I'm pointing out is that if inflation is higher, then it is going to cause imports to rise and simultaneously exports to fall, and the exchange rate will start moving at a faster rate. So the key for us is to keep inflation low and stable and in line with those of our main trading partners, and there will be no incentive for the exchange rate, therefore, to move fast.
Why is it then that we're at 4 to 6 instead of 2 to 3, which is the long-term position of the policymakers of Jamaica?
The objective is to ultimately get to 2 to 3.
Okay.
But in the wisdom of the government of Jamaica, they have set the Bank of Jamaica a target that is slightly higher, with the explicit objective of affording us the ability to grow.
Okay.
You may want to think about what will happen when the government sets us a target that is low. Important for us to be able to achieve this is going to be some preconditions like central bank autonomy.
Yes.
The public needs to believe that the central bank has the authority and the ability to bring inflation down. And once they have this belief, and of course, once the government says, BOJ, it's time to bring inflation lower, then BOJ will be able to use its available tools and therefore steer inflation down to the lower level.
Right.
So it's a gradual process.
Gradual.
Start here and then we get to 2 to 3%.
In time.
Okay. How would you say Jamaica performed in terms of inflation targeting in 2019?
As an average.
Well, the data is there for all of us to see. I would call this our scorecard.
Yes.
And the scorecard may not be as encouraging
Okay.
for 2019 as it can be. We would have gotten a score of something close to 40%, which
Right.
means that 40% of the time inflation fell within the bank's target range, which meant that 60% of the time over the course of 2019, inflation fell outside of the bank's target range.
Either below or above.
Either below or above. You may want to think that this is a failure, but the bank has, over the course of the year, been explaining to the Minister of Finance as well as to the Jamaican public why inflation was behaving the way it did. And I can just repeat for you and the public what were some of the factors that led to this performance.
Yes, please.
Inflation fell below target over the first 4 months of the year because of two large changes. One was a steep fall in agricultural prices that occurred in the December 2018 quarter. And the second was also in the December 2018 quarter, oil prices fell very sharply. The result of these twin shocks, as I would call them, is that agricultural prices fell and over the first half of the year. And similarly, energy prices, electricity rates, petrol prices, because of the fall in oil prices, they also fell over the course of the year. It should be obvious that Bank of Jamaica has little control over these variables. And we expected, and it in fact did happen, that once these prices went back up, inflation would normalize back into the target range.
Right.
The second episode in which inflation fell below was actually over the latter part of the year, September, August, September. And again, the main factor for that was a steep fall in oil prices. So the record is there, 40%, but we also have clear understanding of what the reasons for this performance was.
Okay.
And
Thank
that
you
is
so
part
much.
of inflation targeting, communicating when it is that we don't achieve the target and why.
Very critical component.
So, Mr. Stennett, what are the other important things that we could look at specific to inflation targeting?
Well, Sheena, I would say three takeaways
Yes.
would be useful.
Right.
One is that low, stable, and predictable inflation is the best option for a particular country.
Right.
The second is that when you have low inflation, it itself leads to low and stable movements in the exchange rate. And I would say that the third one is that while we at the Bank of Jamaica now pursues an inflation target that is in the range 4 to 6%, we look forward to the future when the government will ask us to pursue a lower target that is closer to that of our main trading partners.
And viewers, there you have it. Robert Stennett, Division Chief with responsibility for research and economic programming at Bank of Jamaica. Mr. Stennett, again, thank you so much for joining us today.
And thanks for having me again.
All right, viewers, we're switching topics. Let's go take a look at today's fun fact.
Today, there are an estimated 3 million cash machines across the world. The world's first ATM was the brainchild of Scottish inventor John Shepherd Barron. It was opened on June 27, 1967, at a branch of Barclays Bank in Enfield, North London, the first of 6 cash dispensers commissioned by the bank. At the time, plastic bank cards hadn't yet been invented, so the machine took checks and only dispensed £10 notes at a time. The story goes that Mr. Shepherd Barron, an engineer at printing company Delarue, came up with what was essentially a cash vending machine one Saturday afternoon after he missed the bank's opening hours.
It's time for our fast facts. Number 1. The exchange rate, which is the price of foreign currency, such as US dollar, is also important to the bank, as large unwarranted depreciation in the currency can potentially cause inflation to move outside the target range. Number 2. If the inflation rate remains low, stable, and predictable when compared to Jamaica's trading partners, and if the exchange rate is at the right value, future changes in the exchange rate will not be large on average. Number 3. The bank's success in managing the inflation rate within the target will therefore mean success in ensuring long-term stability in the exchange rate. Number 4. Inflation during 2019 was affected by unexpected and large swings in international oil prices and in agricultural prices. And number 5. In general, low inflation in Jamaica has been a affected by low domestic demand relative to the economy's capacity. And that's it for your Fast Facts. Our show for today has come to an end. Follow us on Twitter at Central Bank JA or on BOJ's Facebook page and our YouTube channel. You can also visit our website at www.boj.org.jm.
Of course, we invite you to send in your questions on Twitter or post your comments to Facebook. Anything you want to know, BOJ surely will answer.
And of course, watch Centrally Speaking next week at the same time right here on your station when we will have another special guest.
I'm Anna.
And I'm Sheena.
Thanks for watching.
Centrally Speaking is a production of Bank of Jamaica.